NVIDIA's long-term fundamentals. Why growth potential outweighs short-term risks. In recent months, NVIDIA has been at the center of market discussions, from explosive stock rallies to geopolitical headwinds. While short-term traders closely monitor support and resistance levels, long-term investors are more concerned with the company's fundamentals. The big question is, does NVIDIA still have what it takes to remain a market leader over the next decade? The answer, backed by strong financials and growth momentum, appears to be yes. One, financial strength and profitability. NVIDIA's fundamentals remain its strongest pillar. The company has posted record-breaking profits, crossing $26 billion in net income recently, fueled largely by its dominance in AI and data center chips. Its gross margins, consistently above 70%, show how strong its pricing power is in a competitive market. Such profitability not only allows NVIDIA to reinvest in research and development, but also provides a safety cushion against geopolitical shocks, supply chain disruptions, or temporary demand fluctuations. 2. Leadership in artificial intelligence, AI. The global AI boom is not slowing down. From ChatGPT-like models to enterprise automation and autonomous vehicles, all require high-performance GPUs. NVIDIA's H100 and upcoming Blackwell chips have become the backbone of modern AI infrastructure. Major tech giants, Microsoft, Google, Amazon, and Tesla, all rely heavily on NVIDIA's chips for cloud services, AI research, and self-driving initiatives. This near monopoly in AI hardware ensures that NVIDIA will continue to benefit as demand for AI accelerates worldwide. Three, expanding beyond GPUs. While NVIDIA is synonymous with graphics cards, the company's vision is much broader. Data centers, rapidly becoming NVIDIA's largest revenue driver. Automotive, providing chips and software platforms for autonomous vehicles. Software ecosystem, NVIDIA's CUDA and AI frameworks make it harder for competitors to displace them, creating a long-term moat. This diversification means NVIDIA is not just a chip company, but a full-stack technology provider. Four, strong market position. Despite geopolitical risks. Yes, geopolitical risks exist. US-China tensions, antitrust investigations, and export restrictions can create short-term volatility. However, NVIDIA's fundamentals and technological edge give it a unique advantage. Even governments and competitors can't ignore its products. While China contributes about 13% of NVIDIA's revenue, global AI demand is so broad that even a partial slowdown in China is unlikely to derail its growth trajectory. 5. Long-term growth outlook. Analysts project that NVIDIA's revenues will continue to expand at a double-digit pace over the next 5-10 years, with AI, cloud computing, and high-performance computing leading the way. The company is positioned not just for today's AI hype, but for structural growth in industries ranging from healthcare to automotive to defense. Final thoughts. Short-term risks may grab headlines, but NVIDIA's fundamentals, strong profitability, dominance in AI, product diversification, and global demand, make it one of the most resilient growth stories of this decade. For long-term investors, NVIDIA represents more than a stock. It represents the infrastructure powering the future of technology. As long as AI adoption accelerates, NVIDIA's growth potential is unlikely to fade.